So what should we make of the latest moves, and is a steeper correction coming? It feels like these concerns have been bubbling, and here we are with a sell-off.
So the Fed made it clear in Jackson Hole that they were concerned about the labor market. Clearly, these numbers suggest that was the right concern. Of course, the problem is this ISM services number that we got the other day was hot, which leads me to believe that inflation is still a problem as well. So they're sort of in a bit of a box here. And what I've been noticing, and we've been talking about, Bitcoin's been underperforming now for the last 3 weeks at least, and that is a risk-on, risk-off situation. I think the VIX has been trying to tell a story as well. And then some of the stock price action that you've seen, Oracle filled in that entire gap if you go back and look, and that's where we are now. If you look at Amazon, potential for that technical setup that we talked about, that ion reversal, that's lower. And even Apple, off that big quarter, has reversed and lower. So now you're starting to see good news, bad price action, which suggests maybe there is more to come.
Yeah, I agree. I thought that Oracle retracing entirely is really important. That was big. And also I look like at the VIX, which is just under 20 now, still very much in no man's land. That doesn't make me think, the selling's over at all. If anything, I would think that we go higher from here on the VIX, meaning the market sells off more than lower. So, the huge run we've had, they're just retracing part of it. There's still more to go.
Right.
Yeah, there's no question that you suddenly go from a place where it's great to have Fed cuts, but do we have a growth scare? And do we have a condition in the labor market that, Mel, you've pointed out? 20 years of October data tells you there's something possibly more afoot, especially when we spent the last couple of weeks on this show talking about white-collar job loss, call it the middle to upper middle class job loss. And that's something that would be worrying the consumer. And if you look at the correlation in the markets today, we did see those companies that are exposed to consumer lending, buy now, pay later, things that are related to mortgage servicing, be especially under some pressure. We don't say here, I'm not saying the consumer's falling out of bed. I would say that you start to see some of this concern. Meanwhile, you had a couple Fed folks out there, Cleveland Fed out there, saying they're more worried about inflation than they are job losses. So when you get at least a conflicting picture from a Fed that's not necessarily green light on more cuts, that creates just more tension in a day that was full of tension.
And coming into this week, the S&P 500 was like 13% above its 200-day moving average. And if you looked at the Roundhill Magnificent 7 ETF, that was trading around 30 times forward earnings. So things were overextended. So I think seeing some sort of a pullback here, I don't think is that unexpected, especially when you're getting concerns about the labor market. People are saying, okay, is the economy slowing down? And the first thing you're going to be concerned about are those things that have valuations, which everyone's trying to justify. And if you're in a slowing economy, can you justify those? So I don't know if this is the end of it. I think this pullback is actually pretty normal. I think you could continue to see this run, but it's just had such a run so far. That's what you're seeing. And now people are taking their profits. They're adding to things like treasuries. It's the safety trade you're seeing today.
We have seen, though, time and time again, a propensity of the investor to buy the dip guy.
Propensity,
yes.
Nice. That's great.
And I'm wondering, if somebody is watching out there, would you agree and say yes?
Well, I have to agree because that's been the right thing to do.
You don't have to agree, but maybe this time it's different. Maybe this week,
yes,
it's brewing into something
and
different.
until it's proven to be that. I've been smoked so many times saying it feels like something's happening this time. You like that?
Yes.
We used to say smoked like a Tipperillo.
What's a Tipperillo?
That's
an
awful dime store cigar that apparently a guy and his buddy smoked growing up.
Well, that's all we could afford, Tim. We didn't live in Scarsdale. We didn't get those Cuban cigars.
Whatever.
With that said, to me, it feels like the VIX is headed to 25. It feels like there's another sort of wave to the downside. And I know people have been rewarded for buying the dip and they feel bulletproof, but at some point that is going to cease and desist, and maybe this is the time that it does.
So just so I'm clear, I'm always long. Right. So even though I talk about, I think the VIX is going higher, I am long for sure. I do like to buy the dip. This, to me, is not enough of a dip to be a dip. This is like a wiggle.
To you?
So one of the things I look to is the VIX. The high 20s, maybe even much higher than that. So, we saw it a couple of times. Liberation Day was really out there, but we saw it, last year with Japan. I think we could go much, much higher in the VIX, and then I would look to start. I have some collars on. I would look to take them off. I took part of my Meta collar off too early, so I have more to do there. I want to wait, but just so I'm clear, I am always net long.